Good day, everyone. Welcome to the weekly note of GTC Traders. This is a feature we do each week, as you can tell if you click on the little category for the GTC weekly note. This is something that we do each week. If you are new, I am the senior partner of a separate private proprietary firm, and we decided, hey, how about we put our weekly note up? We're not by any means the only one that does a weekly note. This is something that's very common among many firms, weekly note or a daily note. And we thought, hey, how about we just make this real easy on ourselves? How about we just copy and paste sort of our weekly note from our private proprietary firm and put it over here on GTC Traders. So that is what we do. And the article itself has all of the vagaries usually of different thoughts as far as the economic calendar for that week and what we see in interest rates and various markets. If you're sort of curious about a weekly note, if you go to the GTC Traders YouTube page and you look at something like the playlists, so you click over at the playlists, come down here, go to the GTC weekly and daily note playlist, look at the full playlist. The first three, maybe even the first four videos really describe why so many firms do this. Okay, so why so many firms have a weekly and a daily note, really what is the value of a weekly and daily note, what it is and what it is not. So that's just for folks who are new. And then, as I will now, I usually yabber on about the vagaries of each week. So where are we at? We are at March the 13th, 2024. We delayed the weekly note this week. Do we call it late? Because it's a weekly note, and if we get it out during the week. I thought it best to intentionally sort of hold off for a second because we had CPI data coming out. And as we know, as we have been following along, we are watching an inflation thesis as the data comes in. So the thesis is with the reverse of a globalization, sticky inflation, vertical integration, all of that, right? So we got that CPI data, and it came in slightly hotter than expect, but I would call it sticky more than anything else. You may have seen these charts going around that people like to popularize in streams about, well, if you annualize the decrease only in inflation, we're actually, nearing that 2% or under that 2%, which I said in the Twitter stream I thought was ridiculous beyond all imagining. I'm going to take the part of the data that I like, the decrease, then annualize only the slope downwards, and then try to say, see, a win. Well, as this inflation sort of data came out, sorry, but the real world doesn't work like that. You can't just annualize the part of the slope that you like that sort of agrees with your pre-existing bias. So it came in slightly stickier, but I'm sticking to what I said. I need to see all of the inflation data, not just CPI, not just core, not just PPI, but all inflation, all data that sort of, is it painting an inflationary picture or not for the remainder of this month, March and April, right? And that, I will say, it did start to slide me a little bit towards more of our thesis, our underlying thesis when that data came in yesterday. Let's review the NVDA position. NVDA. Boy, I broke a rule here, and I got everything I deserved for breaking a rule. So we were finally out of all of those short call spreads, right? So we got out of all of those. To raise a little bit of premium when I was in the middle of that mess, we sold some. It's a very common, it's not unique to us or me or anything. As a matter of fact, others have popularized it. You sell the other side, right? So we sold the other side to sort of raise some premium as it was just rallying against us, which meant we were selling put spreads. So we're out of all of the call spreads. We have a small, I think it's 760, somewhere like that, 760 put spread sold now. And we've managed to shrink the risks, shrink the position, and now we're just waiting for that to expire. If that can expire, we will be out of this incredible goat rope at a very, very small profit, but a profit nonetheless. That has been a gentle, not so gentle reminder for me to obey my rules. Don't go into meme stocks that are hot in the news, and by God, don't do it short-dated. I did both, and the market did, as I've said before, what it should do, it wrapped me across the knuckles. So that's what we've got left there. I did roll the UNG. I was willing to accept assignment on that, but I thought let's just try to defend it one more time. So we still have that. We defended it. I put that in the stream yesterday. And we are left with the stock market. Let me finish with this. Equities. So a lot are asking, like, I'm just not understanding this equities rally whatsoever. I think there's a few pieces to it. I'm wondering why the market shouldn't buy equities. And I'm not saying you should. I'm saying the market's thoughts. Listen, I'm just an old guy with glasses, along with everybody else, looking at data, trying to figure things out, and it makes sense in my mind. It doesn't necessarily mean that's the way it is, and it doesn't necessarily mean that I'm right or that I'm going to prove myself right. But when I look over equities, I think somehow, because of macro forces, because of the Fed, because of a lot of things, equities have been sort of backed into a corner of why shouldn't they rally? Like, they've been backed into a bull run. So hear me out. First of all, let's go with our underlying thesis we've had as of late, right? What if rates normalize, manufacturing starts coming back to the United States in a big way? Well, that's more productive inflation, but it's going to be inflation. So rates are going to stay higher. And as we know, and as we've said, and as we've demonstrated, rates can normalize higher. My first new car note was like 7% back in the 90s, and people were asking me, like, how in the world did you as a kid get that? Right? 7%. So there's been plenty of times where people have had to just adjust, and like everybody standardized having rates near 0% and then just getting these ridiculously low interest loans. Well, those days are done, in that scenario. So wait a minute, if manufacturing is coming back to the United States, rates normalize, there's good manufacturing, there's productive inflation, why shouldn't we buy U.S. equities? That's the first scenario. Second scenario is, let's say that inflation does start to cool. That scenario doesn't play out. Let's say inflation does start to cool and we get 2 rate cuts. Okay, wait a minute, we're getting 2 rate cuts? Well, then why shouldn't equities rally? Why shouldn't I buy equities? And the third thing is there a little bit of euphoria taking over in AI, specifically in tech? I think we can all agree with $100 moves on a like $500 stock or two. Yeah, I think euphoria is taking over, right? That's a little bit of qualitative data, but not quantitative. But I think we might safely agree that in AI that's taking over. Well, if euphoria is taking over, why wouldn't you buy? All right, so it's all these scenarios of like, why wouldn't I buy equities? Why wouldn't I buy equities? And why wouldn't I buy equities? Like I said, I could be wrong, but I think that's why we're seeing these rallies. And it's just my thoughts, right? So that sort of summarizes where we're at for the week. And our thesis, our look, as with all the millions of other people that are looking at these markets and trying to come up with a thesis, that's ours. And our thoughts are only good until they're canceled. And that is what it is. Oh, by the way, for folks that have subscribed to like Read the Report or Read the Positioning, I haven't got the stock market bubble out yet because we got to get some readers up there on Read the Positioning. No, I'm sorry, on I think it's Read the Report. On Read the Positioning, I've been keeping everybody updated there as far as the option positioning. So we've got that out, and I've got a few other entries planned, and the stock market bubble stuff is coming. I do realize I'm ridiculously late, but hey, it is tax season, and we got that one long entry out there on differentiating what sort of data are you talking about. Okay, so for now, that has been what it's been. Our thoughts are simply good until they're canceled, or GTC, and our thoughts are just our thoughts for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.